New highs, or are we overpriced? It's pretty much the debate here. Sentiment is the only material positive change in the last few months, which leaves us pretty vulnerable to small setbacks. On Friday, the market closed really strong, only to see a lot of red just after the bell. Because markets have climbed pretty far pretty quickly, it leaves us open to setbacks like these. Therefore, the only course of action must be tactical. For as long as these facts don't change. Let's go over these facts. 1. No change. Earnings. They are still awesome, as they have been for years, arguably a step up in 2023. Inflation is still a problem, still accelerating a little bit too fast. Jobs. No change. We still have full employment, although you start hearing about company layoffs, like Microsoft. Change. For the worse, GDP is now officially negative at least once. Change. For the worse, charts are now back at all-time highs, and the S&P, this is not an opinion, is around 28, which is about 2 times normal. Overbought. All of this leads me to one conclusion. Tactical at these levels is better than investment at these levels. So my action plan has been and will continue to be this week, trying to short rallies strategically and tactically against the indices and some stocks specifically. The indices are easy to short, sell credit call spreads, leave time on the clock, you should be okay. For the stocks, it has to be more tactical, finding something on the chart itself to buy a put like on KO and KR. I may want to repeat KO. It's been a piggy bank so far, paying us so well. As far as feeding the emotions of this market, yes, it is an emotional market. We have 17 Fed speeches this week. Let's look at some charts. We will start with the S&P, or looking at the futures, and you can see that the bulls are in charge. Every red tick has been met with a higher high. So test number 1 would be by Tuesday, we should make another high. Otherwise, we may have a change in behavior on a very short-term basis. The NASDAQ was stronger earlier in the week. It has gone sideways for 3 days. Therefore, it may be ready to revisit the lows from the 13th. The small caps are looking, they've still been buried down below because they did not have the benefit of the mathematical lift from the mega caps. It too is going sideways, deciding whether it wants to break out from the highs of the 12th, you can see the peak, or come back and fill the gap from the 11th, 12th. Notice I'm taking it one step at a time, just a few days at a time, in order to reduce this sentimental market down to numbers, dollars and cents. Therefore, the decisions will be scientific based rather than emotionally based. Now we will delve into the large caps, which are baked into the indices heavily. We have Apple at first. I did do an iron condor for early June on Apple, and so far it's surviving, statistically viable. Apple is stuck with the 215 zone being resistance, and it has a bunch of support below. Not a leader these days unless there's something wrong with the market. Switching over to Microsoft, you can see how physically it looks stronger as a stock, but it too left a few weak spots from the 11th, 12th. So the battle there is 457 versus 446. To think that they were selling it at 330 just a few weeks ago, and now they're stepping over each other to buy it at 450. Right there should tell you that if you trade like the market is trading, you're making a mistake, because they were totally wrong about it just a few weeks ago when we sold puts and put spreads in these beautiful stocks, and now they're chasing the upside just because they feel better about things. NVIDIA, finally, they realized how cheap it was, and now it's playing catch up. Still not out of the woods, although above some pivot points that I deem very, very important, 118 and 126, just to name 2. Alphabet stock is somewhat representative of the market itself. If the S&P is higher in the future, this one should be too. Look left. This is a spike from before multiple times. I have a note here from 312 spike. So it looks like also it was in April. So multiple times. Oh, there we go. And March 25th. So multiple times they've spiked to here and failed. Amazon I deem weak because of the size of the spike it recently got. So if it drops back down to 194, it wouldn't surprise me a bit. It would surprise me if it can take out 216 with force and continuation. The XLF is about 13% of the S&P financials. And so they are, I want to see them breach the huge red tick comment up there. This was March. It shouldn't be easy. And the fact that they're struggling overnight is not a surprise, and it shouldn't be disappointing to anyone. I have a starter bearish position with simple puts purchased that I've shared. I have not added. I don't have any new information. And because I am heavily short Berkshire, I'm hesitant to add because they're kind of the same trade. More on this information later this week. I'm also tracking the KRE because, believe it or not, these days the KRE is acting just a step ahead of the XLF. At least that is my impression. So I'm keeping an eye on it to see what it does first, to see if the XLF follows. So let's see if these guys can come down to 57 and close the gap. By the way, this is regional banks, as they call it. The XLV is in a downturn. You can see lower highs, lower lows. They are fighting headlines that are specific to their business. The government is after them for to reduce their top line. There are some bargains inside this if you know the industry. I don't like these stocks, but they're definitely, some of them are cheap. The XLI chart is incredible. I mean, wow. So this has champion stocks in there like Caterpillar or Deere or Honeywell. Excellent companies. One would argue they are recession proof. You still need them and their equipment to just operate the world, let alone not necessarily just build the world. If I zoom out on it, it still does not inspire a starting point. Look left. I mean, come on. It just rallied. 28% is hitting all-time highs. Never has this been a good, obvious entry point. So NOPE, nope, not an obvious point of entry. As an investor, if I waited this long, I was too chicken to buy it lower. I should wait a little bit longer. I should be brave and wait a little bit longer to see it. And if you're saying, Nick, this is the same for all of other stocks, yes, you are correct. Most of them, in fact, if I switch this ticker with SPY, I should come up with the same conclusion. Look how close we are to an all-time high. This just does not inspire entry point for an investor. Tactical, tactical, tactical. Investments can wait. My opinions. I'll see you in the live.